Hello guys and welcome back to another portfolio update where I go through my £42,000 stocks and shares ISA portfolio I hold on Trading 212. This one will be a bit different from normal as there has been a fair amount of activity in my account that I'm keen to share with you guys. I invest in just 9 companies that are monopolies or have a particular competitive advantage in their field. This is with a focus on years of positive free cash flow that is expected to grow into the future. I'll cover the overall return of the portfolio in more recent times, then jump into the buys and sells I've been making more recently. I recently completely sold out of 2 positions and I was up by close to 30% on one of those. Then I'll start with a brand new position that I've just recently bought into when I saw a bit of an opportunity in the market. And then we'll go through each position, their weighting and overall return so far to the portfolio. And finally, I'm going to end on my plan for growing this portfolio to over £100,000 in the future. If you get something out of this video, please feel free to leave a like and consider subscribing to the channel. So firstly, my overall portfolio value has broke through a new milestone, and that is at £42,000. Now, just 2 weeks ago, I was talking about how I breached the £41,000 with this portfolio, so that's great to see. We can see that it's come £39,000 worth or just over from invested cash positions, and we have an overall return that's just in unrealised gains of £3,121 or around about 8%. Now, one thing I'd like to point out, this number doesn't cover the total realised gains that I've made in this account, so that's around £466, and it doesn't cover the dividends reinvested, which is around £178, although that is included in the overall value. So generally, the value and overall return is sitting a little bit higher than this number. Now, one thing I'd like to say as well, with this percentile growth and change, this fluctuates a lot with how much I've been adding to these positions and this portfolio in more recent times. If we can take a look at it from just the 5th of April in 2024 of this year, we were sitting around £6,700 in this portfolio. And since that time, we've added to our positions quite considerably to get to this sort of level of £42,300 in around about 5 months. Now, it's not really replicatable, but I'd just like to say that percentile gain and change is obviously hurt considerably by adding lots of cash to these positions. It's grown about 6 times the amount in about 5 months, which is quite fast. Let's talk through my buys and sells, but firstly we're going to cover a bit of a mistake I made with a recent investment that I've now since sold out of. Now, I'm going to have to apologise. I made a video on Chineri Energy and everything I said and researched into Chineri Energy is true. Their amazing share buyback program and growing dividend is very real, and I think it will be a very good investment over the next 3 years. But I personally found that I was uncomfortable with this investment in general. I was thinking about the investment a lot, and I believe in this investment was just a step too far for me at this point, because I found I was second guessing myself a lot with my decision to invest in it and was not really willing to commit more money and heavier weighting of this portfolio to it. So the main thing I want from my investments is peace of mind, and I just wasn't getting that from LNG, especially because another stock was on quite a dip that I liked the look of. So I sold all 7 shares of LNG from the portfolio at a total value of £970, at an overall average share price around $177 per share for a total loss around £28. I then used this money and £200 that I had in my free funds to purchase another company. And that will probably be not much of a surprise to many people, and that was Google. So I bought 10.32 shares at a share price around $149 mark to a value of £1,182, which is a complete new holding for me and one I have wanted to get my hands on for a while. So Google's price to earnings was just sitting at such a valuation that I found it really hard to ignore. Below the 20 price to earnings ratio, I think Google is a great business, and it was sitting closer to about 18 times price to earnings. And even though I think the price to free cash flow is fairly high, I do think that this company will be able to recover that when they sort out their capital expenditure. So I started a new position with them, and we can see here I bought around this dip around the $149 mark. Now, since that time, it's obviously up a considerable margin, but we see we've got 10.32 shares, over £1,269 in value, £88 worth up, around 7.53%. And in terms of gains and FX impact, we can see that it's actually closer to about 10%, but that FX impact is in the negative as the pound is strengthening against the dollar. Brings the overall weighting just to around exactly 3% of the overall invested portfolio, and is still my smallest position, but I hope to grow it into the future. Next sales I did was more of a rebalancing of the portfolio, so I'll do these ones together. I completely sold out of my position of Microsoft, selling 2 shares for a value of £650 with £137 in profit made. This was a tiny weighting in the portfolio, a little over 1%, that I would have probably kept if it had been a bigger position of the overall portfolio. But I decided to allocate this money elsewhere as the stock was looking fairly expensive to me at the moment and has had a good run. I then also sold out of 2 of my other positions. Not completely, but just trimmed them. I sold 2 shares of CRM to gain around £388, a position I'm pretty much flat on, and I also sold some of VICI, selling 10 shares at a value of £256, gaining a realised profit of £24. With all of this cash, I then bought a company that I wanted as a much higher weighting in the portfolio and was massively impressed by recently, and that is Brookfield Corporation, ticker BN. So I bought around 34.34 shares, an average share price of $49 per share at a value of around £1,300. And that takes my total overall position to over £4,800, almost close to £4,900, with the total share count around 123 shares. I'm currently up on the position by close to about 11% in realised gain, actually close to about 15% once you manage for FX impact. So I've got an average share count of about $46 per share, and we're up about £482 on the position. Now overall, I really like Brookfield. I talk about it quite a bit in a more recent video, so feel free to check that out, and I'll cover that a bit more in terms of why I think I'm still buying and bullish on this company, even at these prices and even after this recent run up over the past week, up 7.33%. It's one position that I really want to bulk out in the portfolio. Its weighting is only sitting around 11.57%. I'd be happy with this sitting closer to about 20%. So I really like Brookfield. I still think it's not badly valued, and hopefully in the future I can add some more. Maybe if it goes on a bit of a dip like it seems to in the past, I can add more to this position. This brings my overall value of the shares I bought to around £2,482, and an overall value of shares sold of £2,264, with around £129 in profit from those sales, which brings my overall realised profit in this account that isn't shown in the return on this dashboard to around £466. Now that my buys and sells are done, let's talk about my biggest position, which is Amazon, and it takes up quite a bit of weighting on the portfolio. I've got 74 shares and overall value sitting around £10,600, and we're up slightly on the position, about 3%, around £300. Now we can see that with the FX impact affecting us, they've actually taken closer to about 4.6% of those returns from us, around about £500. Mainly because the pound has strengthened considerably against the dollar, which is fairly good from an investment standpoint because my pounds will go further when buying individual stocks. But overall, I really like Amazon as a company. It now accounts for about 25% of the portfolio. I expect this to be higher in the future, sitting closer to about 30%, but we will see how this one develops. Next up, we have our second largest holding, which is Visa after Amazon. Now we have 34 shares at an overall value sitting at £7,200 or so. We're pretty much flat on the position, up a couple of percent or £181. Mainly due to FX, as we can see here, we're down by about 4.89% from FX impact, but actually up around about 7% in terms of gain and loss when we actually bought. Our average share price sits at $263 per share, and now the current share price looks at $284 per share. I really like this one for the scalability of its business model and overall just dividend growth and capital allocation through like the likes of share buybacks and stuff. So I'm really looking forward to owning Visa into the future. I think it's going to continue to be the market leader with close duopoly with MasterCard. Visa's weighting generally counts for about 17% at the moment, and I'd like to improve upon this to around 20% in the future, and we'll see how that progresses. So next up, we've got my Salesforce position. I'm around 30 shares now, sitting at about £6,000, and we're pretty much flat on the position, up by about 1% or so, around £100. Now, I will say that I sold 2 of these shares, but that was mainly to gain cash. I still think Salesforce is looking very attractive right now. Now, we can see with my gain and loss, I'm up about closer to about 7%, but the FX impact is taking around 5% of those returns. Now, the reality of this position is that I will add to it if it gets below the $250 mark again. I want to downgrade my allocation of Salesforce in this weighting. It's sitting about 14% of the portfolio. I'd like to get it around 10%, and that will happen slowly with time. So I don't see myself selling more of this company, but I may have to add to it if the position is continuing to look undervalued, which I think Salesforce is right now. So we will see how that one develops. Skipping out Brookfield, I have Mercado Libre, which is sitting at 2.3 shares, an overall value of £3,600 or so, and we're up by about £700 on the position, up by close to about 24%. Now we can see that FX impact has affected us again, over about 4%, taking away some of the gain there, and the average price is around about $1,617 compared to the share price, which sits at $2,100 right now. And I really liked the company's valuation and cash flow yield at this height. It still looks pretty attractive in cash flow yield right now. Now, I don't see myself adding to it, because mainly its weighting is sitting close to about 8.59% of the portfolio, and it is a position that I don't want massive weighting to, even though I think it's an amazing company. So generally, I'm hoping to keep this one below 10% of the portfolio, and obviously it's had a great run up so far. We'll see if I add to this one in the future, but I really like the company, and if I see it on a significant dip, I probably would add to this position. Now we've got VICI Properties, and we've got 140 shares, at a value sitting closer to now £3,500, and we're up by about £230 or 7.24%. Now we can see FX impact has affected this one as well, close to about 5%, and we've got an average share price sitting at $29.63. Now what I will say is that this one, more recent times, has shot right up. I was buying at around 29, 27 sort of dollars, and since then it's gone flying up. That's mainly because of the rate cuts that the Fed have declared. Obviously, with that rate cut coming down, people are looking for other ways to make that 5 to 6% return. And obviously, the overall sort of dividend yield on this portfolio sits at about 5% on this stock. So when I was buying it, it's closer to about 6% in terms of dividend yield, so my yield on cost is looking quite good right now. So the main reason I sold a few bits of this was just rebalancing. I don't really mind this weighting. It sits at close to about 8.27% of the portfolio overall. I'm fine with that. I don't really like REITs. I may sell out this one way into the future, but that's only if I see a realistic dividend-based stock, because my dividend yield across the whole portfolio is relatively low. Next on the list, we have S&P Global. Now, S&P Global sits at about 7 shares, and I've got about £2,700 or so in overall value. We're up by about 17% on this position, or upwards of about £400. Now, we can see FX impact has affected this one quite a bit more, downwards of about 6%. So we can see how much the pound and dollar fluctuations affects these stocks, and unfortunately that's the reality of investing in American companies. Our average share price is sitting at $419 per share, and overall the share price is now sitting close to about $523. Now, I don't want to add to this position at these sorts of valuations, mainly because I think it is overvalued right now, is the easiest way to put it. In the past year, it's up 40%, and over that space of time, it's upwards of about 20%. So I don't really feel a need to add to this one. If it came down considerably to around the mid 400 mark, I'd probably take a look at it again. But I'm not interested in adding at these valuations, even though I think this is an amazing company. I really like the ratings business, and I'd really like to add to this position because its weighting is only sitting at about 6.5%. Next on the list, we have Texas Roadhouse, which has just been amazing for me. We have 18.29 shares at an overall value of £2,300. And we have about £600 in unrealised gains, or 36% in the green. Now, I will say, again, the FX impacts affect us by 4.8%. And we have an average share price of $118 per share. I was actually buying closer to around this $90 mark, and I sold this position in my taxable account for a gain of about a couple of £100. So we're actually up a little bit more through Texas Roadhouse in realised and unrealised gains. But our average share price in this particular account is sitting close to that $118 mark, which I was still fine to buy into at that sort of value, and Texas Roadhouse has done very well since then. Obviously, they've had a lot of positive news lately. It's kind of levelled out over the past 3 months, staying pretty much flat. And I'm not looking to add to this position right now, as I do think it's more than slightly overvalued. But I think it's a great dividend growth stock for the future, so I'm holding on to it, and I'll be happy to hold on to it, with its weighting closer to about 5% of the overall portfolio, which I anticipate going down over time. So there we go, that is all of my holdings. And as we can see, some have performed better than others. I really like my positions overall. There's some positions I want to add more to, but they've gone on massive run-ups before I could maybe add to. Brookfield Corporation, I would probably include in that. I want to add more to this company as I really believe in it, and I want to get a higher weighting in the portfolio. S&P Global is another one that I would have liked more weighting to, but the recent run-up is just not really justifiable, and the overvaluation I'm seeing is not something I want to add to. Then we've got the likes of Salesforce, which I would prefer a lower weighting of, but overall this value in terms of its share price is still looking fairly good, as people are slamming it because of AI. But what I see is a monopolistic company that has a massive market share in the SaaS business, and I don't see that, CRM business, and I don't see that going away. And we'll see how that develops with time. So this is a position I will probably look to reduce eventually, but right now at these valuations I would maybe even consider adding to. So that shows how I think on Salesforce. Now, one thing I will say is that these positions have grown massively, and that is quite recent. Obviously, over a 5-month period, this has about 6 times the same value, from around £6,700 to $42,000. The main reason for all of that is because I wanted to get money into this account to just sit here. Now it's a bit of a waiting game, but I will be adding considerably to these positions in the future because we want to get to around £100,000. Now, we can see that I've added about £1,000 into this portfolio quite recently, and we only have a remaining current tax year ISA allowance sitting around at £1,227. So after that, my legal allowance of 20k will be used up, and then I'll have to wait all the way to 2025 in April. And generally that sucks because I want to continue to add to these positions, but it will continue allow me to save I'm still going to keep saving money in the invest aspect of Trading 212, where I keep money and keep it in money market funds to gain capital at around about 5.1%. So overall, this value of the portfolio has grown immensely, mainly because of a portfolio transfer I did for about £16,000 from a cash ISA I held elsewhere. So I couldn't replicate this growth any other time. So we're seeing that I've used up a lot of my allocation for the current ISA allocation for the year, but I wanted to get my positions filled out, and that is what I've done. Now I'm looking to wait. I'll add about £2,000 over the next couple of months, and then I will just have used up all my allowance, and I'll wait again, and I'll continue to save. And when April the 6th rolls around in 2025, I will put a lot of money into this portfolio. So I'm really happy to see how it's going to grow in the future. It's actually very interesting and engaging for me. But tell me what you think of my positions. What ones do you like? Maybe what ones wouldn't you invest in? And tell me maybe why, because I'll happy to have a chat with you guys. But as always, thanks for watching. I appreciate it, and I'll catch you in the next one.